Bitcoin has broken to the new yearly highs above $31,000, breaking this year highs and at the same time reaching the highest price on the record over the past 365 days. Ladies and gentlemen, let's give a deeper dive into Bitcoin charts and see how it all connects with the traditional finance. If you're ready to hear this and more, make sure to stay tuned. We are going there right in a second. How is everybody doing? This is Zeta and CryptoBirb talking to you straight from this beautiful office. Let me know where you guys are writing from, where you're watching that from. If you're watching that on YouTube, make sure you hit a subscribe button to stay notified again, as well as the notification bells, right? This helps you find out about those newest live streams that we were having, just like this one. I can see Alex, I can see Will in the chat. Keep them coming, keep the questions coming. There's going to be tons of opportunities to answer some of them in the show and outside of the show. Let me know if you can hear me, see me clearly. All is good, that we can proceed, because there's lots to be discussed, there's lots to be tackled. Bitcoin has broken out to the new yearly highs above $31,000. This is definitely exceptional, very great, very good opportunity, I'd say. Let me know where you're from. Lunch break, New York, NC USA. Very good. Loud and clear. I'm really curious what NC is. I don't believe it's North Carolina. It's going to be most likely. Jeez, I'm silly. Lawrence Martins, loud and clear, just in. SEC approves first leveraged Bitcoin futures ETF. Wow, that's interesting. From Marcin. It almost sounds like a Polish name. Michał Koenig, I'm watching you from YouTube z pociągu PKP jadącego do Wrocławia. Pięknie, Michał, bravo. Lawrence, Nigeria, very good. Bieszczady, beautiful places, everybody. This is good time. London apart, very good. Ontario. London, Ontario, I didn't know you have London in Ontario. That's interesting. Norway, Christine. I'm really curious. Those are beautiful surnames that all you beautiful people have in Norway. I'm really curious how it pronounces. If you can type it in for me, Christine, for how I should pronounce your surname, that's going to be interesting. France, we can see. I'm not sure it's going to be Jeremy. I think it's going to be Jeremy Farsi, maybe. Maybe I'm wrong. Good to see you. I'm so sorry if I mispronounce your names. This is all good. Very good. Listen, this is very exciting. The chat is blowing up, which is very nice. Long time unseen. And this is also a good sentiment indication, right? The more people in the chats, typically the better the sentiment, and the more the better the chances of the market continues to move in the direction of the breakout, right? We tend to get awakened only when the market breaks, when there is something critical, when there is something like a proper earthquake in the market, quote unquote, right? Well, having people from Romania, from North Carolina, France, Norway, this is so beautiful that we all are here in full diversity, and this is the goal, right? We are discussing, will Bitcoin continue to pump? And let's get into some crypto market analysis. However, before we roll into crypto market analysis, we have to understand that crypto is just a asset class, or I should say an asset class. It's one of many objects that we should be discussing. And the good point is that all of those objects, all of those financial markets are intercorrelated or connected in a way, right? Since there are no physical barriers like there used to be, perhaps separating a wall, between two markets. Right now, the markets are free floating. It's a public market. Publicly listed companies' stocks are very much driven in terms of their prices by our behavioral biases. The way we react when we look at a price chart, it actually translates and sets in stone itself, prints itself into a chart, right? Our behaviors are directly reflected by the types of candlesticks that continue to appear in the market, and that's the entire beauty. And we, as the market technicians, myself being the chart market technician, we believe and also rely on a very good hypothesis and a tested, academically proven, that the market discounts everything, or I should say almost everything. The markets are inefficient. We, of course, cannot predict the future ever per se. We are not ever certain about the future. We cannot predict insider trading. We cannot predict what and how many times Congress people in US and outside in the government people, who shouldn't be trading, they trade, of course, on insider information right before you know, they propose a ban over a security, if they're going to short it, right? And of course, it's for their own benefits. So it's illegal. It's insider trading is illegal. Yet it happens. The markets are manipulated. So technical analysis is not going to give you answers to that, right? Technical analysis is not going to give you answer when the next meteor crashes into Earth, or the next, dinosaur extinction comes up. This time is going to be humans. We don't know. We don't know about those catastrophes. We don't know about something that is unpredictable. Same way we couldn't know about the Bitcoin crash and the COVID times. Knowing just watching Bitcoin chart that the COVID crash would come. It's impossible. So do not expect technical analysis to give you magical results. It's not magical thinking. It's not that you just snap a finger and you get a Bitcoin target, right? Or that you snap a finger and you literally know each and every single answer to your questions. That's not how it works. It's real world. There are uncertainties. There are irregularities. There are no ideals. There's imperfection everywhere because the nature is chaotic. The nature is full of entropy, this inherent chaos that just we cannot get rid of it, right? It continuously, once in a while, reshuffles all the pieces of a puzzle in the box and spits out the new results, right? Because all of those tiny little elements, this dust, this statistic dust, eventually correlates and becomes something bigger that is unpredictable. We cannot predict that. So, having this little bit of a disclaimer that I think sharpens your mind, opens your mind, prepares yourself for having an open attitude to approach technical analysis in a real manner, not magical manner. That the fact that you draw a line in a chart doesn't mean that everybody in the world will listen to it, right? So let's try to get rid and put aside our magical thinking of technical analysis, and let's focus on the facts. Let's focus on the numbers. Because behavioral analysis, behavioral biases can be quantified and can be used to quantify the risk. And this is exactly the job of technical analysis. We're using the quantifiable risk techniques, relying on volume, on price action, on breadth, on momentum, etc. Right? So we can conclude and set up and prepare for different types of scenarios to make money profitably, not really knowing the future. That's the entire beauty. So, we have to understand that Bitcoin, again, is just an asset class, right? So we have to understand how it positions itself among the other assets. So let's give it a look. Let's give it a deeper look for what is cooking behind the scenes today, right? We can tell that, okay, the markets, the major markets, Dow Jones Industrials, Composite, NASDAQ Index, New York's Stock Exchange Composite Index, S&P 500, AMEX, French, German, Euronext, Venture Composite, all of those are in the red. The indices, the major averages are in the red, everybody, right? Same way for the major indices for Dow Jones Composite here, right? Dow Jones Transportation in the red, utilities, NASDAQ, again. What else? The small caps, S&P 500, S&P 600, mid caps, 400, right? What else? All the stock sectors, less the communication services, barely breaking even. Communication services is the only kind of like a lone rider, the sole trader in the profit today. However, it's arguable, right? What else? Everything else is in the red on the U.S. industry indices. That's what we can tell. International is all in the red. U.S. bonds are kind of like a 50-50, I'd say, or 60-40, arguably. The 30-year bond USB is in the red, 0.76% on the negative side. The yields are to the upside, 1.84%, which is often anticipated by the long-term investors. The long side of the maturity curve of the yield curve of the maturity, long maturity is often driven by investors' expectations. The Fed has only impact on the short side, short end of the yield curve, right? So they can only impact the Fed funds rate, the short-term things that they are setting. And however, the longer the maturity of the bond, of the treasury bond, of the more the investors' anticipation and expectations are actually being translated into the market itself. So the 10-year yields minus 1.29%, minus 1.29% for the TNX. This is pretty interesting. The bonds are continuously rejecting those 200-day moving average, which is pretty interesting, following this a little bit of a head and shoulders peak. Notice, I would say that instead of, again, trying to magically think of the patterns, focus on the trends, right? The trends are downwards. The red curve is a 200-day moving average. A 50-day moving average is the blue curve, and the 20-day one is a green curve. All of those are trajectorying downwards, right, to the downside. What it tells me is that even, I don't know, the future, then the trends tend to persist, right? Those are those directional movements of the prices that tend to persist, which means that statistically they have better chances that they will continue in the direction of the breakout than to reverse, right? So once you get a trend and the trend is well defined to the downside across all the time frames, it is a very positive, significant tide that is pulling back to the downside, right? It's important. CRB Reuters, Commodity Research Bureau index repurchase by Reuters is actually down today, minus 1.82%. Silver ETF minus 19%. Very go gold. End of day is here minus 1% on the downside. Silver minus 1.5 again, right? So overall the commodities are not in the green. And if we scroll lower, just look at what's happening with cryptocurrencies. The cryptocurrencies are the only green region, here today, right? This is pretty interesting. So it seems that cryptocurrencies are today the the MVP, or the most important player, right? It's like Messi is like the captain. It's like Cristiano Ronaldo of the markets for today. This is where the attention is. Of course, significant breakout to the upside. All averages are up. Confirm that again. Try to put it aside next to the bonds, right, where all the averages were down. Here, all the averages are up. This is what the bull market looks like, everybody, right? And then you get a technical confirmation of a bullish crossover of the averages, which tells you that the short-term average just continues to persist strongly, much more strongly and aggressively. Following significant breakout above the medium-term trend. Medium-term trend has been corrective, of course, to the downside slightly. There's been this little bit of a head and shoulders top, arguably. However, you might argue that it could have been a little bit invalidated here. Doesn't matter. What matters is that we got the diagonal resistance breakout some time ago. I alerted that on Twitter, everybody. And then we've actually broken to the new highs. The new highs are here. This is pretty important. New highs are important, right? Because how often do new highs come up? Not so much often, right? The dollar is bouncing a little bit, 0.31%. UUP, the big dollar fund, 0.57% to the upside. So it's a little bit, again, up and down. However, here, the point to note is that the dollar is still moving below the 50-day average. That is, again, a little bit mixed, I'd argue, right? Right now it's flat. Downwards oriented 20-day average, 200-day average, representing the bull market or the bear market, is downwards. Hence, the dollar is in the bear market and continues to break supports. The VIX reaching the consumer's sentiment index, anyway, the trader's sentiment index, relying on implied volatility of the S&P 500 put options, right? This is reaching the lows unseen since 2020, if I'm not mistaken. So very, very significant moves. The market rotation is real, right? Let me know, everybody, if that makes sense so far. If you have any questions, please do make sure to let us know. Drop them in the comments. I'll do my best to tackle some of those. If we don't manage to press them in time, I'll do my best to study them with my team and answer them off the show. Let's go. So again, Dow Jones Industrials, it's reached. This is a very very interesting concept, right? So just know this actual region, right? Each and every single time, 34,300, 34,700, 3, 3, 3, 6, right? So anything above 34,300s technically has been sold off, right? This is pretty interesting. This is like a supply layer, arguably, right? Does it mean reverting on its own? Well, I would be cautious with that. It doesn't necessarily mean that, okay, it's going to go down here, right? Because this is where the previous kind of like yearly lows are at mid 31,000s. Instead, I would say that, again, focus on the trend. The 200-day trend has reversed. It's not bearish anymore. It's not the bear market anymore. We are in the bull market. The trend slowly yet consistently improves, right? It's heading upwards. And if it's heading upwards, this is a bull market. This is not my opinion. This is a fact, because the line is moving up, right? So it's not my opinion. It's not what I think about the market. I'm just looking at the average, and the average is a trend. This is a trend. This is an actual representation of what the price is on average. This is a trend. So with the trend line is moving up, the trend is bullish. Hence, the bull market. Simple as that. And in the bull markets, I know that the price eventually tends to persist higher than to remove lower, right? Dow Jones Transportation is also favoring, and again, in light of the Dow theory, the averages confirm each other. So you're looking at a parallel movement and a breakout on the Dow Jones Industrial Transportation. Hence, the conclusion is that it is fairly healthy, right? It is a healthy move. It's not just that one deviates from another. It is a whole move. It is a move that is shared between those two averages. The S&P 500, what it's doing right now, following this magnificent, very strong close above 4,200, right? We rallied all the way to 450 almost, right? And reduced a little bit. Now it's just playing around the previous breakout level. You could potentially argue that there might be a chance it's a breakout retest. So typically what happens is once the resistance is cleared and broken, right, you kind of like get a first outside of it, and the prices pull back to retest those areas where the recency bias kicks in, and everybody who missed out on the previous rally, they would right now bid those areas and basically kick in not to miss out again, right? So the recency bias, the regret bias are all there. And this is what eventually is trend promoting, right? The hindsight bias as well. If you think that something has been was predictable in the past, or that, okay, yeah, this breaker was so obvious, like, if only I entered that, I would have made 5 millions. But okay, you didn't enter, right? So everything is obvious only in the hindsight. Nothing is obvious at the time of making the decision, right? So while making the decision, pressing the buy or sell button, this is where the uncertainty peaks. This is where we are doomed to make the most behavioral mistakes, both on the cognitive side, simply because our mind is playing tricks on us. Cognitively, our thoughts are being misrepresented, or emotionally, that our emotional biases, like a loss aversion bias, tells us to deviate from our plans. Regardless of what it is, most likely, again, we're looking at a little bit of a pullback to the downside following a major significant breakout. And again, the trend is moving up. This is a bull market. The trends are not moving down. It is not a bear market anymore. I'm so sorry, bears. This is a bull market, right? We're not in a bear. Give up on your outdated bear market frames. And the sooner you do it, the less cognitive dissonance you have, the less denying of the reality, the less disbelief, the more you can take advantage of growing markets, because we're in the new regime. The S&P 500 also translates again in a way to how the market reacts, and it leads the economy, right? So rising bull market phases on the S&P 500 translate to improving economy 6 to 9 months after that, right? So it's super interesting. It's super interesting. Here we're looking at an XLY versus XLP. This is a relative strength ratio. When you compare the two prices of securities, you can actually draw very interesting conclusions, but because you can define which is outperforming and which is underperforming. If the ratio goes up, and that's been the case since 2023 started, the XLY has actually been outperforming the XLP, right? And we're talking 1.696 all the way up to 2.276. This is a market rotation. This is how the market rotates away from the risk off, which has been the dominant tendency also on the relative price trend basis, right? The relative strength trend has been moving to the was moving to the downside for the entirety of 2022, right? See, this is the 2022, and 2022 was the year of the preference of the risk off of the risk defensive stocks, right? Such as consumer staples, such as healthcare, right? Such as utilities, etc. Here, the consumer staples XLP is basically not the preferred choice anymore. The market, on average, slightly picks up, right? It ticks up. There's some first sign of an actual inclining trend for the first time since 2022 started, right? So arguably, the on average, this is a long lagging confirmation. However, the dominant preference ever since 2023 started clearly like an immediate reversal. It shoots up, and ever since it continues to make higher highs and high lows. The relative strength ratio is focusing and giving you answer that the preferred choice among the investors is not the XLP, it's not the consumer staples, it's not the safe high, it's not a safe long-term stocks, with dividends. It's actually the hunger for risk. Traders are hungry for risk, and this is what it looks like. right? So bullish or relative trend breakout has been with us for quite some time after following the first kind of like an early breakout in January, I think over 200-day moving average. Ever since, of course, a couple of slow months, stocks back and forth sideways, just like, S&P 500 was rejecting 4200s. And right now, we're on the bullish side of the breakout. Trends have reversed, and the market is picking up on average as the preference inclines for the risk offensive techniques, consumer discretionary, such as cars, durable goods, Teslas, and so on. Energy, how is energy looking? Energy is looking continuously worse, right? This is pretty interesting. Energy was the best performer of 2022, right? And guess what? It's the worst performer of 2023. Right? Again, the roles have changed. The markets have shifted the polarity. The traders are not looking for safe shelter anymore. They're looking for risk. They're getting risky, right? And as a result, we might be looking, and probably I've been wrong in many times in the past, of course, so take it with a grain of salt. However, if I'm looking at it, I see a major reversal pattern over here, right? Of course, until it breaks, we don't really know, and well, we know in the hindsight. However, the relative strength ratio, just the one we are looking at right now on the top hand side, on the top and the right hand side of the chart, right? This is an XLE to S&P 500. This is a relative strength ratio, which tells you that if the ratio declines, the XLE continues to underperform S&P 500 as the S&P 500 gains on strength and this XLE is left behind, right? So what it tells you is that the relative strength breakouts ratios are actually preceding the price quite often, right? So what happens on the actual breakout on the relative strength ratio, right? This can be a little bit of a forecast into the future. This can be translated in the future because if the preference between investors, among investors change, their attitude change, it takes time before it starts being discounted in the price. However, this sensitivity is like a derivative of almost derivative of price in a way, right? Of course, not directly. It's basically telling you again that, well, that ratios, the relative strength ratios have predictive power in a way, right? The derivative of price is momentum, of course, here. So while looking at it, right, what we can tell is that when the actual relative strength ratio broke out for the energy last time, right, there was a breakout on the ratio side, and a market was actually bottoming at that time. So you could have got in very nicely into ratio breakout while being literally at the bottom of a symmetrical triangle boundary, right? So ever since the roles have reversed off 2023, right? The 2023 has shifted the polarity. The compass is downside oriented for the XLE still, right? And this is the relative strength ratio. So the preference is increasingly away from the XLE and more towards the the S&P 500. So what it tells me is that risk appetite goes on and on to increase, right? And the market is getting stalled. The market is stalled. So new lows have been reached multiple times on the relative strength ratio side, and no new lows have been met yet on the price. And because of that, in a similar fashion that the relative strength ratio gave you an early warning and a trigger about the breakout before it happened on the price side, just maybe we're looking at a similar situation when the price is about to break into the new lows, which I frankly feel would happen following the relative strength ratio breakout, right? Because if you think about that for a second, the relative strength ratio tells you about the preference among investors, right? So if the preference among investors is internally shifting and organically shifting inside of the market, then eventually, if more and more people continue to step away from the XLE and move towards the risk side, there is no one left on the defensive side of the XLE, right? Hence, there is no demand, and hence the price may fall, right? So there is a little bit of I'd say of predictive power to it that you could assign. Of course, it's good to consolidate and eventually trade upon a systematic approach, right? So mechanical trading, algorithmic trading, systematic approach, trading systems is far more important and profitable than trading and getting lucky, right? It may happen that the war escalates and the energy supplies will shrink and the prices will shut up again. We don't know that, right? However, the relative strength ratio, observing relative strength is one of the core elements of technical analysis, intermarket technical analysis. John Murphy, everybody. The dollar is stalled right now as well, right? And where is it? Where is it? Minus 2.16%, 100 and almost 102 points, right? Hovering above an inclining 50-month trend, 98 points, point 6, following the massive reduction of the prices from mid 2022, right? So again, the dollar is sensitive, of course, to interest rate policy, and at the same time, it prices in the expectations, right? So if the expectations right now are among traders that the Fed is eventually going to not only skip but continue to pause the interest rate hikes, this is on its own um, inflationary in a way, right? In the conditions of still high inflation, this is a little bit of inflationary, or for sure it's not deflationary, if you know what I mean, or disinflationary, right? So as a result, the markets have more space to grow because the more inflation there is, the more inflated the prices are, the higher, the better the business environment if it is eventually, in a way, with some tweaks, of course. Um, so yeah, dollar is still trading for many months below the critical resistance of 2000. I'd say 7 years data since 2015 through 2022. 7 years resistance, 104 points. Right now, it's irrelevant anymore, right? So I would argue that this level was broken, and most likely we are going to continue, chop between 102 points, 105 points, maybe 98. Who knows? We don't know. But the dollar is definitely not so bullish anymore. Plus, we've seen that on the 200-day moving average basis, this is this very chart, the 200-day average trend is bearish. So this is a bear market for the dollar. And relative strength ratios can be also represented in the relative rotation graphs by my good friend Julius de Campenaer. He's the actual inventor of this incredible tool for mapping out the relative strength between different asset classes. And what you can tell is that the leading quadrant, which is strong on the relative momentum side and on the relative strength side, so it's both outperforming the S&P 500, which is here in the middle, and actually gaining on the momentum side here. You want to be long in your portfolio or overweight in your portfolio on something that is strong and improvingly strong. And you want to be short on your portfolio in something that is weak and increasingly weak, if you know what I mean, right? So everything except for XLY, XLK, maybe XLC is a good fit. If I were to build my portfolio right now on the stocks, I would long XLY, I would long XLK, and I would probably slightly maybe reduce a little bit of XLC, and I would short XLP, XLI, XLV, real estate, REITs, of course, basic materials, utilities, and the energy. Financials are improving a little bit. However, it's a long tail, but it's still fairly underperforming the S&P 500, right? So the conclusion that I get is for portfolio building, for portfolio allocation and attribution, if I were to allocate my money, right, I would so much more allocate exposure to XLY and XLK versus something that is performing very well and very sharply, right? A little bit less, exposure to XLC, and definitely let the least exposure or even go short on all of those stocks, right? So this is pretty interesting, right? So XLY over the past 5 weeks gained 10.3%, XLK technology 7 and 8. So XLY, the consumer discretionary such as good Teslas, etc., are the strongest performer, and technology is right behind it. XLC slightly worse, and everything else is basically in the red. This is pretty intriguing. And in the light of momentum investing, we want to belong strength and short weakness. We want to hold on to the winners for those positions that continue to outperform, to continue to show strength. And we want to get rid and short the losers. Whatever brings us losses, you should cut away from it. You should get away from it, right? Or short it. So this is funny thing because it helps you navigate so easily for the map and gets this portfolio exposure tips and insights immediately while having just a glance at it. Otherwise, what most of the traders happen to do is they do the exactly opposite. They hold on to their losers while cutting the winners early, right? So instead of making money, they're holding on to what loses them money. And then there is the big surprise. Where did all my money go? Well, you put it all in the wrong places and you hold on to those wrong choices, right? So using tools like this one by Julius de Campenaer can be helpful, I think, to discover what's the righteous, what's the good choice. and was the wrong choice. So we are with Bitcoin. Let's give it a look at an actual more detailed chart. I think the main chart for 2023 for me, that's going to be this very powerful move all the way from 200 week moving average at 26,623 right now. This is the benchmark. However, arguably it wasn't necessarily the most of the anchor, I'd say, right? Because if you have a look, then what really worked well so far is the actual horizontal trend line, merging the pre-breakdown lows from early 20, pre-breakdown, support from 2022 before all the Terra and the FTX came in, right? And it connects into holding as a support very well right now, right? So ever since the breakout, the market has retraced, right? But the market moved 100% from 15,500 all the way to 31,000. This is a ideal 100% movement. So this happened fast in a matter of 2-3 months, maybe 5, sorry, right? So regardless, it's a strong paced fast action that is typical to the major reversals, right? So arguably, again, we're looking at an early stage of a confirmed bull market, right? The bull market was confirmed already early, a couple of months ago, when the 200-day moving average and all the averages started climbing up. That represents the bull market. Otherwise, we are now looking at more and more confirmation for that, right? From many different angles. And the most important levels, arguably from around $25,000, the main anchor, the main arbitrary level that was to be held, it held. It's positive, and the market followed through higher, right? So we still have a couple of days, of course, to close the week. However, if the week comes up over $31,000, just maybe 40,000 is going to be next, right? We love those round numbers. If you think about it, we love round numbers because they are easy to remember. They're easy to memorize. They're easy to wrap our minds around that, right? So it's easier to remember 30,000 than 30,000.617321 or 30,567.37.6, right? No one remembers that, me neither. 30,000 is a round number. Is it a round? Nice number. We love round numbers. 40,000 hence might be the next magnet. Right now, the 30K is not a deal anymore. Maybe 40K is coming next. Who knows, right? There are many, many reasons. And eventually, since we are in the bull market, right, that might be the next obvious, quote unquote, choice. Otherwise, the correlation coefficient at the bottom of Bitcoin against the S&P 500 on a 7-week basis has shot up aggressively back to the positive values. The market is moving on average at 0.36 for the correlation ratio in the positive. So it's slightly, it's not strong, right? It's improving. It's positive, which means that on average, there is some coverage. There is some decent coverage between the Bitcoin prices and the S&P 500 prices on the 7-week average basis. However, it's not strong, right? Typically, when you have a look at it, the Bitcoin moves most of the time on the positive side, right? So it moves in a similar fashion, more or less strongly, more or less deviating from that as the S&P 500 does, right? So here, what it tells me is that each and every single time, actually, the market tanked, on the correlation side, the correlation reversed, and Bitcoin traded opposite to S&P 500. The market proceeded to reverse soon after. I made a tweet about that some time ago. Completely forgot. But that's the case, right? So you might want to keep paying attention to when the correlation coefficients go negative, strongly negative, right? When Bitcoin is moving strongly away or strongly in an opposite fashion to S&P 500. For instance, S&P 500 pumps and Bitcoin actually dumps instead, right? Just for whatever reasons. Yet eventually, again, this is a sharp bounce from -60, I think, all the way to 0.36 right now as we speak. Strong move, improving correlation means that if the S&P 500 is continuing to go, then Bitcoin is going to have better chances statistically to go up as well. This is the situation when one comforts the another. Hope that makes sense. And before we jump into the main Bitcoin discussion, ladies and gentlemen, this is your Friday webinar. And on Friday webinars, I love reminding you that you can get our free, profitable, successful calls. that we've been dealing with and giving you guys for many, many years, ever since 2017. And the best part is that it's all tested, back tested, it's proven to work, it is profitable, and you can get them for free. And the only thing you need to do is, if you're watching that on YouTube, make sure you hit that subscribe button, smash the notification bells on as well, so that you stay notified every time we put out a new video, just like this one. And if you want to do it fast, you have the link right. Where is it? It's going. The iPad is actually just. Well, I should say here. Boom. There you go. You should go on the burbness.com/bybit. And this is our official partnership, and we've got you guys a good deal. Not only you get this kind of fees on trading, you pay less, more money stays in your pocket, and you actually have more money to trade with. You also get deposit bonus up to $30,000, and you get those incredible, profitable, tested, reliable calls, the actual actionable trade insights that are profitable, and you can get them for free, and you can get them for a month, for 4 months, or even for a year, depending on which criteria you meet. So go ahead to the burbness.com/bybit, and you're actually gonna go and watch that. Serdecznie cię pozdrawiam, stary znajomy z piekarni. Okay. Pozdrowienia. Thanks so much. Very good, everybody. Let's fucking roll to the Bitcoin's analysis for the last final time. So if we are again to focus on what's going on with Bitcoin, then I'd say here's the main chart to look. Right, here's the main chart simply to look at the confirmation. Let me find the tweet real quick about that. Where was the tweet? Jeez, I put it in highlights. Hang on, maybe the functionality is there already. Highlights. There you go. So that's what I wanted to say, right? The breakout that happened some time ago, and I informed that everybody on Twitter, was and is confirmed by volume, right? You see a nice volume spike right here. This is nothing to argue. It's confirmed by the breadth, because the breadth indicators are also showing you increased movement and improvement for all of the altcoins, or at least increasing alts and increasing numbers. The volatility has improved naturally, right? The volatility is gonna be listed here, right? It's above the 50-day moving average for the volatility itself, right? That's the volatility chart. The blue curve is the 50-day moving average. And of course, the corrective times come up with less volatility as traders more and more fear. They have less and less certainty over the time, and they continue to follow the loss aversion and take away all their orders. The market just stalls more and it just dies under volatility. And that's been the case for the past couple of months until the breakout happened 2-3 days ago, right? And now we are sharply back above the 50-day moving average for the volatility, for the ATR, average true range, right? So it's pretty interesting. The confirmation is there on the volatility side as well. It's reliable. It's also there on the price travel distance, right? When we travel 27% or more to the upside from the breakout lows to the actual breakout highs, right? 28% of the movement over a 700 billion Bitcoin capitalization, right? This is what is it? What is the Bitcoin cap actually? Let's have a look. What is the actual Bitcoin cap right now? Where's? Give me that. Instead of quick calculations, why don't you give me a quick market cap? Come on. Market cap. There we go. I don't want to get this one. Jesus, so complicated. Dollars. The market cap of Bitcoin. Where's the market cap of Bitcoin? 606 billion. That's what it's showing. It's 3.51% today. So $600 billion industry. When this is moving 28% in one direction, this is not a coincidence, right? So we got a very decent confirmation also on the price traveled. When it moves 1% or 0.5%, this can be an accident. But when it moves almost 30%, it's not an accident, right? It's not easy to move 600 billion worth of money 30% upwards. It's not easy. Price action itself, so it's making new highs. It's making higher highs and higher lows right now. Of course, this chart is a little bit outdated. Here's the new actual one. We broke into the new highs, right? So it's making the higher highs and high lows. Price action, the very basics, the naked chart is actually there, strong and favorable. Besides time, we spent already considerable amount of days, number of days outside of the breaker levels above $27,000, right? So it's not an accident if it breaks and it hides back immediately below the broken resistance. It's not. It may be accidental, it may be noisy, it may be random, but if it stays for a long time above the breaker level, it's legit. The momentum is also there, right? The momentum is also there. You can tell that the market accelerates eventually. It's not moving kind of like slow paced movement upwards. It's actually ripping fucking vertical right now, right? So if it does so, it's full of momentum, and opposing strong movements is like trying to stop body weight with your body weight speeding truck. There's a speeding truck coming right at you, and you're standing in the middle of a highway, and you're expecting so that your body weight will stop the speeding truck. So that's the same way if you try to short this Bitcoin rally. That's pretty much the same. And the support resistance levels also were broken, right? So the support, were broken and confirmed. 31 resistance was broken, and all this stuff, all is that to tell you that the breakout is legit, and we are in the bull market, and the bull market breaks higher again and again and again. So we are looking at a consecutive next chapter of the bullish rally. Maybe it's confirmed. That's all I know. The breakout is real. I'm not saying it's not going to retrace. Maybe it chops around. Maybe it drops lower. Who knows? I don't know that. And I'm not even supposed to know that. I'm not even trying to know that. I'm not even aiming to predict that. Predictions are unprofitable. I trade on the money. I trade on the trends, trend following, ladies and gentlemen. And that's the moving average. That's the 200-day moving average. That's the Bitcoin trend. If it moves up, the trend is bullish. This is not a bear market. This is bull market. And it's been with us for many fucking months already. Wake up, right? Otherwise, if I know people who shorted entirety of 2020 through 2021 period when Bitcoin broke from what was that, from 3,000, from $4,000 lows into 60K. I know people who shorted all the way because they got stuck in the old bear market frames. So unless you want to short out and miss the entire rally and just try to slow down the speeding track with your body weight, it's better to move along and join on a bandwagon in here and make money, right? Instead of being right, you focus on being profitable. So make money. The trend is bullish. The bull market is here. There's not a single tiniest place for discussion for that, because that's not my opinion. This line representing a trend is literally moving up. There's not a single person in the world that will tell me that this moves down, right? Hence, it's undebatable, it's undeniable that Bitcoin is in a bull market. Anything else that is just trying to tell us that, okay, it's bearish, blah, 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 blah. This is biases, right? This is misrepresentation bias. There are people who are stuck in the conservatism bias. They are overweighing the old data versus the new one. They're rejecting the fact that Bitcoin is breaking to new highs time after time, that it's staying above the bullish market trend for 6 months, right? So if you're fed with all the bullish confirmation and you reject that, you're likely either short or underexposed, or you missed out the rally. There is no other option, right? And this is your mind trying to defend your ego. That happened to me 150,000 times. However, I recovered from it. I'm not free from biases. I'm definitely far from. I make so many mistakes. I lose 70% of the time. However, I lose and still am profitable, right? That's the beauty of technical analysis. That's the beauty of trend following, ladies and gentlemen. So, before I ramble myself to death and bore you to death, what is going on here with Bitcoin? Let's get some actionable ideas. So first of all, again, the 12-hour momentum bands for the Burbicator Pro, they are upwards. Again, upward trend. This is an upward, very powerful breakout. They are baseline related bands. Those are not Bollinger bands. Okay, those are custom indicators that we have on the Burbicator Pro. I'm going to show you how we can actually get access to it. And that's the system. That's the system that I have pinned and publicly, again, just triggered the buy signal at 26,530. This is my pinned tweet. I share all my open positions. I share all my entries. I share all my exits. This is like, you cannot fake that, right? This is all true. And it's been there, and I've posted that in real time. And it's been hanging there since June 19, which is 4 days. And Bitcoin was at 26,500 when the signal came in, when I entered $490,000 position. Right now, it's probably closer to 600 or something. And it's profitable. I lose 70% of the time. I get chopped like crazy. MF, I got chopped like crazy because the market moves sideways mostly. When it moves sideways, you get stopped out, right? Because it's not trend. And myself, as a trend promoter, as a trend follower, I'm expecting a trend to develop, which is infrequent. So I always choose to have many small losses and few big winners coming from trends rather than mean reversion, which is the far opposite, where you would have many wins. You're going to be right often, but you're not going to be much profitable, right? So it's being right or being profitable. You have to choose one. And I always choose profitability. Fuck my opinions. I can always be wrong. Um, so yeah, trends tend to persist. When they finally catch on fire, they tend to continue and continue and move up or move down depending on what the trend is. The trend is upwards, hence the chances are that it continues upwards. And you can tell that this has been the case. And when you see a trend, like I said, that is not perhaps stretched out over the months, that is reliable, that is nice, that is very slow. But if you see a trend which is aggressive like crazy, which is basically moving up more and more aggressively and faster and then better and stronger, that's suicidal for your portfolio if you try to oppose that. If you try to short that, you basically are plankton for the whales. This is what it is. However ridiculous it may sound, this is what it is, right? So do not try to stop the market. We don't control the market. This is a called illusion of control bias. Just because we short, uh, believing that we want to get cheaper prices for Bitcoin, it doesn't make the market turn around, right? This is illusion of control. And we are not contributing to the market reversal, I promise. You have no control over what the market is doing. And believing you do is actually mistaken, right? And mistakes cost you money. Mistakes lose you money. And if you lose money, you're not winning and you're actually getting less. So it's going to be harder for you to make money. So again, keep your losses tight. Hold on to the winners. Bitcoin is winning. Hold on to the winners. So yeah, that's what it is. I think the volatility is here. The breakout is confirmed. The bull market is here for a long time already. It's been here with us for many months. The actual baseline, if you compare that, where is it? The baseline, the Burbicator Pro baseline, the sensitive moving average, the 200-day moving average, it gave a signal so much earlier than the 200-day moving average itself, right? If you compare that, this is going to be the second overlay. It's going to be the 200-day average for the simple one. And the baseline is the orange one of the Burbicator Pro, that my private trading system upon each and every single system is based that we have under our umbrella. So it's been moving up, and it gave the buy signal. It started moving up, signaling this is a bull market, basically in early January, in the mid-January, right? And 200-day average simple, it only gave the distance. It only gave the signal of the bull market, right? In mid-March or late March. I think it was mid-March. So there was 2 months of delay between confirming the bull market, between the Burbicator Pro, the system that I use, and the actual simple moving average that is popularly used. So by not watching Burbicator Pro, right? You've basically missed out on 2 months of price action. I made a public entry in January for a month. It lasted a month equally, over 690.20. I remember this entry. Then exited around 22.800 when there was an exit signal. Waited up a little bit, I think 21.700, 28. Then waited until 28 or so, something like that. It's all public. You can timestamp that. I'm not doing tweets. It's all there. Each and every single loss, you're going to find many more losses than wins. But then I'm profitable. I choose to be profitable. So supports hold again. All the technical factors are there. It's bullish itself. Regardless, what I'm saying is that by not getting the access to the Burbicator Pro, you basically given up 2 months of profits. So instead of entering at, imagine, 6,900s or 17,000s, you basically could only find a way to enter around 20,000 or maybe $22,000-$3,000. So this was about, what was that? We can actually measure that from this one to this one. It was actually 12%. So we could have made 12%. And if if one person trades, with $100 portfolio, maybe not significant. If you're a whale, if you own tens and hundreds of millions, 12% is going to be significant. It's going to mean millions of dollars made or not made. So yeah, it's good to follow those sensitive price action trends that we have under Breakout Pro. It's good. And I promise to tell you how we can get it. So you can get to the bourboners.com and you can literally check out with the Breakout Pro indicator. It's there. You can subscribe for a month, for quarter, for yearly, etc. Depending on your choice. You can check out with Apple Pay. You can check out with cryptos. Cryptos should give you 10% off also, and then 4 months option is also 10% off. Maybe it's the internet, we'll see. Regardless, that's where you can get it, right? So we can go to the bourboners.com, and by the way, all the documentation is there. Right? So you can read the whole documentation for how things work, and you're going to get access to all those tools, including my profitable trading system. Why is this shit not working? Gonna call in my team and see what's up. Maybe it's some break. Regardless, trend following, right? So I'm using a trend following breakout systems. This is the most profitable way to make money. The current time frame trailer is my tool. This is what I use. I disable the divergences. The markets are divergent. They show divergences most of the time when the market is overbought and oversold, but the trends, guess what, can tend to persist. So you can have an overbought market and it still rallies for 500%, right? So again, you wait for a breakout signal, it comes up, and you just enter, right? And you enjoy. This has been the case, ladies and gentlemen, everybody. This has been the analysis. So it seems, long story short, that Bitcoin is set to continue. We'll see. Let me answer some of those questions. Just the quick ones. By the way, thanks for tuning in, and congratulations if you're watching that again, because you are early. You are at the earliest, most exciting stages of the bull market that you can be. You're gonna make it as long as you find yourself profitable in the systematic approach. It doesn't take once to be profitable. You need to be profitable over a long-term period, right? And for that, you need a reliable system. For that, you need access to reliable indicators. Otherwise, you're paralyzed. You don't know what to do. You have no guidance. You're emotional. We all love winning. We all hate losing. However, eventually, when you don't really have the right person or the right resource, the right materials, the right indicators, you may never be able to get up on your feet, and that will suck, right? So let's get you winning. Questions. Would you say DXY was developing a higher low? I wouldn't say so. I would say it's probably looking much more as a redistribution phase. Michał is saying it's my first time with you live, therefore I don't really know the agenda. Well done, Michał. Bravo, Michał. Bravo. Super. Good to have you with us. I'll give a round of applause for Michał for tuning in for the first time. And like I said, congratulations. The first time is just the beginning of a beautiful journey. So let's make sure we have you here more often from now on. Queen, smash the likes. Thank you so much, Queen. I'm late. Sorry if you're ready. Can discuss Bitcoin ETF approval today. So someone broke the news on the comments. I haven't looked it up, so I have no insight just yet about that. Long story short, it's bullish, right? Matures the industry. What else? Missing you on the banter streams. Dr. Run, and I'll be back on the streams. Thank you. Beautiful mind. You have a beautiful mind as well, Queen. Thank you for your being positive. The positive people that have the most beautiful souls. Thank you for that. God bless you. Miki. Bravo. Great. Thank you and see you soon. Piekarnia. Muszę sobie przypomnieć, co tam chodziło. Can you take a look at Heart USDT? What is Heart USDT? I have not a single idea what that is. Hang on. Heart USDT. I don't even know what that is. It's not even popping up in the Google search. Heart USDT. Hang on. Heart. Is it this one? I have no idea if this is this one. That's the first time I'm hearing about this coin. Oh, 2022. What is it telling me? Is it telling me anything specific? Hang on. What's happening? Price. Boom. Let's keep it this way. Well, it's moving sideways. That's what I can say. It's in some sideways oriented pattern. Maybe it's, you can just maybe call it again like some symmetrical triangle or something. I wouldn't pay too much attention to it because it's just simply out of trend. It's not trending upwards and downwards. So it's not a good buy. I think it's good. It's best to buy the breakouts, right? So it's, as long as you get some breakout, probably above 35, it's going to be so much easier and so much more attractive. Or short the breakdown below 12 support. That's the only conclusion I get. Otherwise, it stalls and it's choppy and it's not really attractive. That's it. Probably that's about it. So I've been showing you here, right? That's the sideways. That's the sideways thing. It's just not too much attractive. Again, maybe symmetrical triangle, maybe coil. Wait for the breakout. I'd say over the highs or below the lows for the short or long. Otherwise, it makes little sense to get chopped in the sideways because most likely it's going to continue until it breaks. So it doesn't give you much leverage or much offer, much edge, I'd say, to buy something like that, right? For now, it may be bullish, but until it is, it's not, right? So it's neutral. So I want to be, again, long strength and short weakness. I want to be overweight and just rallying the winners rather than waiting for them to pop, right? So focus on where the winners are and just that's your focus. Makes sense. I don't know what that is, Alex. I'm silly. I'm dumb. And I'm not a fundamental guy, right? I don't need to be because I use charts and charts tell you the story. So that's a beautiful charts story, right? As a technician, I don't need to watch 5,000 news. I don't need to read all the newspapers. I don't need to see what's happening with Bitcoin ETF approval. I don't need to see and watch the FOMC or the CNBC or anything else. I only need to sit down and watch Bitcoin chart. How cool is that? It's good. Romania AI project. So price wise, is not so much attractive for now. Doesn't mean it's a bad project. Ladies and gentlemen, again, before I run, make sure you hit the subscribe button, smash the notification, likes, and maybe click on the link that is right there. Try to maybe get it on the video description, on our YouTube. Make sure while you're there to subscribe, hit the notification bells, and smash the likes if you are there following Kind Queen's suggestion. I fully back it up and endorse that. Thank you so much. You are the early winners. You are in the early stage of the bull market. So will Bitcoin continue to pump? We don't know for sure. However, trends tend to persist, and we're in the bull market, and we broke into new highs, reaching yearly high records. So my guess is a yes. God bless you all. Thank you all for coming. See you around. Have a beautiful weekend.